If you have any money in the markets right now, a 401k, a brokerage account, anything, you are living through the biggest shift in how money moves in your lifetime, and almost nobody sees it while it's happening. There's no breaking headline that says, from today on, money will never move the same way again. It doesn't arrive in one big moment. It shows up quietly, in the background, while you go to work, check your balances, and go on with your day. Years from now, it'll be obvious. Right now, it's subtle. For most of history, money moved because people decided it should. Investors read reports. They listened to advisors. They reacted to fear, chased confidence, worried about uncertainty, and then finally pulled the trigger. Markets reflected human emotion as much as economic reality. That relationship is changing, not because humans stopped mattering, but because human decisions are now being supported, constrained, and in many cases replaced by systems that don't feel pressure, fatigue, or doubt. Money is learning how to move without emotion. And if you want your wealth to survive the next 10 to 20 years, you need to understand what that really means. Stay with me, because in a few minutes, I'll show you how Sirius Capital is already adapting and what that means for investors like you. This isn't the first time humans have gone through a shift like this. First, we replaced muscle with machines. Engines did the lifting, factories did the grinding. Then we replaced memory and calculation with computers, spreadsheets, databases, search engines. Entire industries changed as tasks that needed constant attention became automated. At the beginning, every new technology looks unreliable, unnecessary, even dangerous. Then it becomes normal. Then it becomes invisible. Finance is in the middle of that same arc right now. We're not automating your ambitions or your goals. We're automating the moment of execution, the moment a decision becomes a trade. The moment risk is adjusted, the moment capital moves, every civilization reaches a point where its tools become more consistent than its instincts. Finance has hit that point, and the gap between investors who adapt and those who don't is only going to get wider. A lot of investors still imagine markets as rooms full of people shouting orders and calling brokers. That world is mostly over. Today, software executes the majority of trades worldwide. Algorithms react to liquidity shifts, volatility spikes, interest rate changes, price movement in milliseconds. Large institutions run millions of simulations to see how portfolios behave under stress before that stress ever hits the real world. This isn't a science experiment, it's infrastructure. It's already how modern finance works. And even if you never see these systems directly, every dollar you put into the market is now competing in an environment dominated by them. The question is no longer, do I like this stock? It's, is my money structured to survive in a market that moves at machine speed? Humans are brilliant and creative, but we are terrible at being purely rational when real money and real uncertainty are involved. We fear losses more than we value gains. Confuse short-term noise with long-term meaning, act fast when we should wait, hesitate when we should act. Decades of behavioral finance research say the same thing. Individual investors routinely hurt their own returns through emotional timing. They sell when fear is at its peak. They buy back in when confidence is already priced in. Machines don't ride that emotional roller coaster. They don't feel relief in rallies. They don't feel panic in crashes. They don't change behavior because a headline feels scary. They follow structure, and over 10, 15, 20 years, that difference becomes enormous. In a market shaped by machines, the biggest risk for investors is still being driven by emotion while everything around them runs on rules. This is where a lot of people misunderstand automation in investing. It's not about being the fastest. It's not about building something so complex no one can explain it. And it's definitely not about replacing people. It's about discipline. Think about it. A calculator doesn't replace your brain, it protects you from simple math errors. An autopilot doesn't replace a pilot, it keeps the aircraft stable when turbulence hits. One assists humans, the other protects humans from their limitations. Well-designed investment automation does both. It assists your strategy and protects it when emotion would normally take over. So before we go deeper, it helps to see how this kind of structured automation is actually built in the real world. Let me quickly show you how we approach this at ATN. At ATN, we help everyday investors access private, institutional-style trading systems that used to be reserved for hedge funds and ultra-high net worth individuals. The model itself is hybrid by design. Automation handles execution and monitoring around the clock, enforcing rules consistently and without emotion. Experienced professionals oversee strategy, risk management, and changing market conditions. Our clients aren't looking for excitement. They're looking for consistency, transparency, and peace of mind. Our clients want growth, but not at the expense of control. ATN was built on the idea that real automated income should simplify your life, not add more stress to it. If you agree with that and are interested in learning more, there should be a link to speak to us in the description of this video. With that context in mind, let's get to the part most investors never hear about. Not all automation is safe. Some systems trade aggressively with no real risk limits, keep firing even when market conditions completely change, depend entirely on a single company staying operational, offer zero transparency into what they're doing with your capital. The code isn't what protects you, the structure does. Details like who actually controls risk, where your money physically sits, how liquidity works, if markets seize up, what rules apply when markets behave badly, those details matter more than any performance chart or clever marketing line. And if you're anywhere near retirement, those details are no longer nice to know. They're the whole game. This is why investing feels different now, even when the headlines sound familiar. Markets move faster, panic spreads instantly. Automated systems react long before most investors even finish reading the news. For long-term investors, the goal is no longer, can I outguess the market? It's, is my system built to behave well when markets misbehave badly? That means less focus on prediction, more focus on resilience, less excitement, more stability, fewer stories, more structure. The smartest investors today aren't asking, does AI exist in finance? They're asking, how is AI being used? And is it implemented responsibly with real risk controls and transparency? Artificial intelligence is not here to replace your goals or your purpose. It's here to replace inconsistency. It doesn't decide what you want from your money. It protects the process of getting there. Used carefully, AI becomes something rare in finance, a source of calm, rule-based discipline in one of the most emotional environments on earth. It doesn't strip the humanity out of investing. It shields investors from the most expensive part of being human, those moments when fear or greed override the plan. We are not watching the end of human investing. We're watching it evolve from instinct to structure, from reaction to design, from emotion to consistency. The future of wealth will not belong to the loudest predictions or the boldest personalities on social media. It will belong to the quiet systems that survive uncertainty, enforce discipline, and protect capital when it matters most. In markets shaped by machines, your biggest advantage is not being faster than them. It's having a structure that doesn't break when everything around you does. If you found this helpful and you want to see how structured, AI-driven systems are actually built, make sure you check the links in the description and subscribe so you don't miss the next deep dive.